Hello friends, in the YouTube channel Advocate Amit Kumar Gupta. The case which I am going to discuss today is Reinforce Recruiter Private Limited versus Principal Commissioner of Income Tax. This case has been reported in 99 ITR Tribunal. Short notes 13. The matter has been decided by Delhi ITAT and the date of the judgment is 9th September 2022. The logic of discussing this case is that even the higher authorities of the income tax like Principal Commissioner of Income Tax sometimes misunderstood the provisions. In this particular case, the case of the Assessee was sent into the revision under section 263 because the learned Principal Commissioner of Income Tax misunderstood the provisions of section 56 subsection 2 clause 7a. The revision was made by saying that the assessing officer has not looked into the fair market value of the shares and has not considered the financials of the companies in which the investments have been made. But for the assessment year 15-16, in this particular case, the assessee has not received even a single penny in the name of the share capital. Means the assessee has not issued the share capital, but the assessee has made the investments, which was the point of doing the scrutiny of the assessee under section 143 subsection 3. The case of the assessee was selected for scrutiny for the limited purpose that there is very low income as compared to the investments made by the assessee. There is low income shown by the assessee as compared to the advances given by the assessee and the huge investments made in the unlisted shares. So practically in this particular case, there was no applicability of section 56 subsection 2 clause 7a for the assessment year 15-16 because no investments have been made by the other companies into the company of the assessee. But there was inverse situation that the assessee had made the investments into the other companies. So whatever the basis for which the scrutiny was taken up of the assessee were already taken care of by the assessing officer and all the points were covered, but the very higher authority like Principal Commissioner of Income Tax misunderstood the provisions and the revision was done. So the ITAT said that there was gross misapplication of the provisions by the learned Principal CIT and hence whatever the revision has been done is not as per the law and quash the revision. Friends, the only purpose of discussing this case is that when the authority like Principal Commissioner of Income Tax can misunderstood the provisions, so a very layman assessee who is nowadays indulged in number of the compliances, whether it is related to the GST, whether it is related to the income tax, whether it is related to the FEMA, whether it is related to the RBI, can also misunderstood the provisions of any law. So in our law, there are penalties and prosecutions like nothing. So every penalty, every tax rate, every prosecution should be levied by keeping in mind that when the higher authorities can misunderstood the provisions and there are no provisions in the Income Tax Act that whenever they do such a blunder mistakes, no fines are imposed on them, the department does not take action against the errant officers, then in genuine cases where the assessee misunderstood the provisions and some tax liability is there on the assessee, then in those cases a very exorbitant penalty should not be levied. Although the point is not here in this case of levying the penalty, but the message comes that when such a higher official can misunderstood the provisions, an assessee can also do. So while imposing the penalties, the department should not be very harsh and should not be very illogical, because nowadays the penalties are very huge and high. So in this particular case, the ITAT categorically annulled the revision under section 263 on the ground that the provisions of section 56 subsection 2 clause 7a are not applicable to the case of the assessee for the assessment year 15-16, because the assessee has not issued any share capital during the year, but on the inverse side, the assessee had made the investments into the equity shares of unquoted shares. So at the end of this video, once again I am repeating the name of the case. The name of the case is Reinforced Recruiter Private Limited versus Principal Commissioner of Income Tax.